All right, I'm going to just take a quick look at the metals sector. Again, I don't have any openings at the moment, but you can always email me and get in line on the waiting list. Sometimes I do have openings come open in the morning if somebody lets their subscription expire. So just a quick look. I do not think, I see a lot of analysts again trying to call a top or expecting a resumption of the bear market, but I don't think that's likely. I think gold has completed the 8-year cycle low, and it's now in the advancing phase of a new 8-year cycle. I do tend to think that this 8-year cycle, we're going to get a bubble phase in gold, one where the public really piles in. But just a couple things I wanted to look at. First off, we've got this kind of a rounded bottom here. I don't think this doesn't look like your typical bear market rally. If we were still in a bear market, those tend to be kind of sharp V-shaped rallies that then kind of fade away. Even this was a very sharp rally up, and then of course we start getting the attacks. But this looks more like a basing pattern. And I can make a case here that we may be forming a rather large head and shoulders, inverse head and shoulders bottoming pattern. Here would be our left shoulder, the rounded bottom for the head, and then now GDX has come up into this resistance zone, which would be the neckline of this, and not unusual that we might get a pullback from this resistance zone. And we're now forming the right shoulder of this pattern, which looks like it could be completed here pretty soon. I have been warning people that we're late in the daily cycle, and that we kind of locked up some profits on most of our positions, took down our leverage just in preparation for this into this first daily cycle low. But I do not think that the initial rally out of an 8-year cycle low is going to be over after one daily cycle. I think the momentum is strong enough that the buyers are going to come in, and they're going to make another run at the recent highs and probably make higher highs. I kind of think the odds are fairly decent that gold's going to test the all-time highs at almost 2100, and if this does indeed set up as an inverse head and shoulders top, then we should be getting pretty close to the bottom of this first daily cycle. And then this has a pretty high target. We might even add another 12 points to where this might break the neckline, which would take miners up into the 42 to 44 zone in here. And then one more thing, let me go over to the bullish percent chart. All right, the bullish percent chart, it isn't really a sentiment chart like it sounds like. It's a measure of overbought and oversold conditions, and it's based on how many stocks in the index are on buy signals in the point and figure charts. And you can see coming out of the last 8-year cycle low, the miners, they had a divergence here, and then the bullish percent didn't top. Had a nice pullback right here, but it didn't actually top until we got that top of that rally in mid 2016. And I suspect the same thing is going to happen. I really doubt that this is going to be over with until the bullish percent gets up here, probably above 90%, maybe can get to 100 again. But I don't think that this initial rally out of an 8-year cycle low is going to top at 55%. I think we got much higher to go. So, as far as I'm concerned, I think this is a normal correction, one that's probably quite overdue, although not surprising coming out of coming out of an initial 8-year cycle low. That first initial rally can extend longer than is normal and go further than is normal. And I would say we have completed those parameters. And now we're getting an overdue correction that so far has still been pretty mild. And I think once that correction is over, which could be pretty soon, I think it'll be this week, then we could very well make a run to the 40s or higher on GDX and in the mining stocks. And of course, I think that would be a run to test those all-time highs on gold. As I've been saying in my recent videos, though, I think it's too late in the intermediate cycle to get a sustained breakout above those all-time highs at about, I think maybe it was about 2089, 2090, something like that. I don't think we'll get a breakout. We might get a marginal breakout, but I don't think it'll be sustained. But I do think we've got more to go in this intermediate cycle before we get a larger correction, something that corrects for 4 to 6 weeks. Right now, I'm only expecting this correction as just a minor daily cycle low, and those usually only run 4 to 8 days. So again, no openings for the SMT premium newsletter just yet, but you can get on the waiting list, and from time to time I do have an opening in the morning if somebody lets their subscription expire.